Okay, this is going to be a quick one, our update on uranium here. I posted this on Twitter. This was just an inside day, and it finished out as an inside day. We actually even got a little bit of a rally towards the end of the day. I'll get rid of some of these lines because it's kind of hard. It might be a little bit hard to see. But essentially, yeah, this was a gap before. That's why I had those lines there. You can see this candle here, right? Just to make sure, just to put a kind of finer point on it, right? We're inside that range. It's pretty simple. Now we see which side of the range do we break, right? Do we break below 26.24 or do we break above, roughly 27.59, call it the 27.5 area? So it makes it a pretty simple kind of risk reward in a way. So tomorrow's candle, like most things, it's going to be pushed around by the market in general. And so it'll be a question of, do we open closer to the lower end of the range, which is what, based on this close we've set up for. Now, what we're potentially seeing here is day 4 of a new daily cycle. That's the sort of, the bullish count, the optimistic count. And that said, this could be setting up, this could become a bear flag, right? You could see a world where if I just draw this, these lower like that, and then this becomes a lower high, right? We could see that. So we have to be on guard for that. And again, the broader market is going to tell you if that is likely to happen. Definitely take a look at my broader market update, because that's going to tell you the direction that most things are going. You can see, you can click the link at the upper end of the screen here, upper right hand corner. But this becomes our level to watch. And again, the direction of the broader market will tell us, is this a new daily cycle that's going to give us a little bit more of a rally, or is this just the continuation of this daily cycle and we are actually destined to close this gap? It does feel like this gap isn't going to remain unclosed, especially if we are moving into the 3-year cycle low, which I'll talk about. But if we look at the weekly chart, I talked about this previous video, way above this 200-week moving average in yellow. That said, as price continues to not really make much progress, I mean, look at this chart, right? We had this period where we're going up like this, and now we've just kind of had this choppy mess kind of. So this is giving price time to catch up to this moving average, which is also rising itself. And so we may end up finally crossing below it. You can see we lived below it for a really long time. So that's going to be important to watch, in my opinion. It is a green week. Still an inside week. Again, this is important to kind of understand these things. Until we cross above this candle's high, so that's $29. This is just an inside week, and we're not going to do that tomorrow. I mean, maybe, who knows, maybe. That seems unlikely. So this is probably going to end as an inside week, and then it'll be a question of, do we test that $29 high next week and maybe even break above it? And let's just look at the 2-week pattern really quickly. Right, so the 2-week pattern is a similar kind of thing, still inside. In that case, the high is 30.86. And that 2-week candle closes next week. So that's an interesting little additional level, potentially. And finally, if we look at the monthly chart, so this teal looking line is your 50-month moving average. It's rising pretty sharply because of this rally that's been happening, right? And so this, just like the 200-week moving average, is gonna kind of catch up to price if we don't make much progress, if we stay in this kind of choppy mess. But as I mentioned in that previous video, you can see pretty clearly that 1988, call it $20-ish level, is your kind of line in the sand. You really wouldn't want to break below that, because then that opens you up to the 16, maybe even 14 area. And maybe we don't even get all the way down there. That's obviously quite a good distance from here. But if we're assuming that this was our 3-year cycle high, and we're now just kind of moving into a 3-year cycle low, we could be setting up to do something like that, right? Maybe we even kind of bounce around this, right? We don't have to plunge below it. We could just kind of live down here and some, because that $20 area was a really important level. So I wouldn't be surprised to see us kind of do a dance down there at some point. So that's CCJ. The rest of the uranium space is looking sort of very similar. Let's just look across that here. This is your monthly chart. So we're now officially making new lows on the monthly for most things. GoVX definitely is. Well, actually, not most things. GoVX is. In most cases, we're still kind of hovering just above that, not quite having made that a new monthly low. So, again, I suspect these things, just like the broader markets, are not going to have a good time the rest of the year, so Q4. And so I keep saying cash is a real position, especially in a bear market. That's not something to be afraid of. And let's look at how these weeklies are shaping up. So in most cases, the weeklies are still green, just like CCJ. And so that sets us up for, we'll have to see how we close out tomorrow, Friday. But, that sets us up for possible continuation into next week. And let's zoom in on Denison. Denison actually has a false breakdown kind of setup here. And that's a higher low of all these. So that's an interesting level to kind of potentially take it back to like that 140 area, which would be a nice upside from here since we're at $1.16. So that's definitely one to watch. So that's your general lay of the land for the uranium space. Don't need to make this video too long. Patience is the order of the day. Patience.